traders, what's happening? Welcome to 2018, January 3rd. I'm Jamie Saettele with the SB Trade Desk Midweek Strategy Webinar, first one of the year, of course. And before we start, let me wish you a happy new year. And let me know that you can hear me and see the screen, of course. Test, 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 test. Can you guys hear me? I can hear you and see the chart says Mahai. All right, there's my man Mahai. I know he's going to want to go over the DAX, I'm sure, and we will take a look at that in a little bit. For now, we're going to start with the dollar, US dollar index, the FXCM version, and we've actually hit, you can see the close here, we're being supported. So a little bit of a bounce today, could get a bit more of a bounce, but to me, Elliott-wise, this should be nothing more than a fourth wave, and I would be looking for it to fail probably near the 11,900 mark. So that is, you know, if not sooner, but that's a good area for it to fail. You can see if you look at, say, a 4-hour chart, right? You've got this, if you go back to the 1212 high, I guess it is, got a 1, 2, and this is probably just 1, 2, 3. This is probably even a smaller 4. So essentially, we're looking at a period of consolidation as we head, you know, in the early part of this year to, you know, essentially correct the very sharp drop that we had at the end of the year, which was kind of an odd time to get a trending move, right? Nonetheless, the analog continues to do its thing. I mean, even up to the consolidation. So here we are, and it's saying this is DXY, the analog we've been following for months and months and months, and we've got essentially consolidation being called here by DXY, by the analog, probably through, you know, roughly 112. So that would actually be through the rest of this week and all of next week. We might just be in a period of consolidation before things fall apart again in the dollar. So again, if you're new here, we've been looking at this, and what this is we're looking at price action compared with the 1994 top in the US dollar index. Again, that is the one that is heavily weighted towards euro. So if anything, this would have more of a, you know, euro implication, but this is where it comes from. So, you know, 93 to the 94 top. So we've matched up the 94 top. Essentially, it says we are right about here, right? So a bit of consolidation and then a big slam lower. So as I've said for some time now, there's really no reason not to follow this as long as it is working. Again, the main concerns for me from a, you know, from other technical criteria, the big one, of course, with euro is the seasonals and the COT. So COT being that you can see the red line here are the speculators, and you know, several weeks ago you had the largest long position. I think, I don't know if it was quite a record. Let's see, it was a record 11389. Yes, it was a record long position. So had a record long position with euro, which again is simply, I'm aware of it, makes me a bit, you know, less excited, if you will, about buying euros. But price action, of course, is key, and as long as we do hold this 1960, right? That's the level. So we have the slope that we're following for near-term stuff, like for entry, right? Which would be simply based on the trend line from the November low and the December low, and you create a channel there, and you can see that a parallel from that channel, if you put that parallel on the low from 1130, you do get some very clean touches. So this area, along with the high from 1127, is going to give you 1960 is a key point here, right? That's where we want to focus. Also, if we look at this from a simple pattern perspective, so those of you that have been with us for a while, you know that my strategy, or my style, I guess, is it's amalgamation of technical criteria, and that involves classical patterns. It involves Elliott wave stuff. One of the things the problems I guess I have with so-called classic Elliott wave or people that just do Elliott is that there's not always a clean Elliott interpretation, at least for me, right? One of the main issues then is forcing something. So like a pure Elliott person will be like, well, this is wave 4 of 3 of 5. It's like, well, okay, fine. And then they're counting every little wave. To me, the biggest thing here, the way I look at Elliott, is that when we go back to the 2017 low, which was exactly 1 year ago on January 3rd of 2017, we had, a move up, a move down, a big rally that can be counted in 5 waves impulse. That tells me 1, 2, 3. Everything since the high back in September is a 4, and that we are moving higher in a 5th wave, which means we're going higher. So that's how I look at Elliott. Okay, here's another way to look at Elliott, or sorry, not Elliott, but to look at patterns. Look what we had back here. This was August 2nd from this year. For that point, you had a head and shoulders top, right? Head and shoulders. Okay, shoulder, head, shoulder. You remember we had the breakdown. A lot of people were excited about it. I kind of suspected that it would prove actually false, right? Because we had this idea that the euro is actually a bull because of the 4th wave that I just talked about. And since then, you've got, what could be a 1, 2. Okay. It could also be a 1, 2, 1, 2. There's always multiple interpretations with Elliott. All right. But here's the kicker with this pattern stuff. So you had this head and shoulders. It was a breakdown. It was a false breakdown. So then once you went through the high from the right shoulder at 1879, that triggered a false breakdown and therefore a bullish signal. Well, that failed too. But then you ended up making another head and shoulders. This one was the inverse head and shoulders. So shoulder, head, shoulder. Okay. That confirmed, and then simply dropping to 1960 would just be nothing more than a retest of that pattern, right? So you've got multiple things here. You've got the false pattern breakdown, you got the successful pattern breakout, and then a retest here would give you reason to buy, right? And kind of going with the idea that you've had a couple false patterns, so this pattern, is more likely to work out. Is the way that I'm kind of going about it. So that is just a quick overview for those of you that may be new on kind of, maybe an example of how I might look at something from multiple technical criteria, right? It's not all classic patterns. It's not all Elliott patterns. It's not all just slope lines. There's a combination here of things that are useful to me. All right, so that is really the most important thing, in my opinion, for euro, okay, is 1960. I want to see support at 1960. I'd like to buy into 1960. Let's go into a short-term chart and just see. So this is an hourly chart. We've got the square root levels on here. Okay, you can see that the year open is the magenta line. Obviously, we are 1 day into the year, so not a whole lot of test there, but funny enough, we actually tested the year open here on the last hour and we got a little bounce. So, you know, these levels are things that we pay a lot of attention to. And so far, it looks like you've got you know, either a 1, 2, 3 or an ABC, right? Again, probably a series of 1, 2s, right? 1, 2, 3, looking for that fourth, and then to buy into 1960. Let's see where the 38.2 comes in on this. It's going to be 1980. All right, so would be aware of 1980, but that 1980, 1960, where we want to get involved in. Let's remember this first week of the year, we actually don't have, hasn't been a whole lot of economic data released so far, but there's going to be a ton coming out on Friday, right? So tomorrow, not much. You do have some stuff in that people may want to follow. No, that was actually today. Was the European unemployment. Fed minutes today. I'm not sure how big that's going to be, but you got a lot of stuff Friday. Okay, Euro CPI, CAD unemployment, US unemployment. All right, so that should kind of provide a lot of liquidity. And simply get people putting big money through. And I wouldn't be surprised if we get kind of a spike into whatever happens Friday and then go the other way. So for me, that would be obviously looking for maybe support into the median line, whether that's 1960 or 1980, right? So for Euro in particular and dollar generally, it might be kind of that we're, sideways or just kind of dull until Friday, given that, beginning of the year, not sure how many people are putting big orders through here, but Friday certainly should happen with all the data. Okay, let's look at just real quick dollar Swiss. I don't want to spend too much time here, but we've got what I think is a downtrend. It could be a very big downtrend. The big reason for me saying that, of course, is the trend line, which is right here. Okay, so here's the trend line from 2011. Okay, essentially we take out the spike lows from SMB in 2011 and in 2015, and we are looking at this trend line, and it's a beautiful, beautiful, beautiful trend line, and it was resistance in October and November, and we've just started to make our series of lower highs and lower lows. So with that said, you want to see resistance, I think we in the update last night, we talked about a zone of resistance between roughly 97.73 and 98.07, and the upper end of that zone is going to be where your median line is, right, from the channel. So that, of course, was good support back in December before the break. So same thing as Euro, in that I think Friday you might get, if we get a Friday fade move on NFPs, maybe a dollar spike or something to complete whatever corrective move it's doing off the low and then turn back down. That's kind of what I'm thinking with dollar Swiss. Okay, what about cable? Cable is one that actually I'd be interested in a short here. There's a few things with cable. So you've got the reversal. I showed the chart on Twitter. You're getting a J spike, right? That you can see here. So we get these J spikes. When you get a reversal like that, a J spike, you want to see it happen on obviously on a well-defined level in order to kind of believe it a little more. And we just have that happen today, right? And barring a move back to the highs, but at the end of the day, we're gonna end like this. So this alone gives me reason to maybe want to try a short with cable. I will be looking at obviously the short-term price action, you know, digging into maybe a 15-minute even, when I write the update to see if we've got a nice clean 5 down, and if there'd be a proper entry to short with a stop against the high, essentially, right? And I'd be looking for, you know, first level I'd probably be looking for probably about 33.83, which is actually your first square root level down. And let's talk about that for a second. This gives us a good reason to look at the square roots. So I love the new part of the new year. When you get a new year, I love looking at where you have your new square root levels, right? So square root levels simply take the open for the year. I think I do have it here. I do have a table. So let's use Euro, for example. Euro opens the year at 120.02. The square root of that is 110. So your levels are 110 pips apart, okay? So your first support is 18.92. Your first resistance is 21.12, right? Pound dollar, you know, 35.93 open the year. Your first resistance is, what was it? What we got? 37.10 and 34.76. So when we look at it that way, what did I say? 30? No, it's 34, not 35. Hold on. Should be 34.99. 134.99. Yeah. So your first resistance is 36.15. The high last night is 36.12, so it's pretty close. This happens, you know, happened last year with Euro. If you remember, we had on the first day of the year, you spiked to your first square root level, which at the time was, you know, going to be down here near 103.61, and your low was 103.40. And, you know, the square root levels give you pretty decent points of reference to work with. Okay, so we'll be referencing those as always when we move forward with the swing updates. Just be aware of it. But yeah, with pound, you know, we're getting this reversal day here on the second day of the year, and I'm open to a short position there, despite me, you know, being generally, I guess, dollar bearish. You know, seasonals for cable's seasonal chart, January is one of the worst months, right? So, you know, it's not up to me to try to rationalize why, you know, cable would fall apart this month and other things would remain relatively stable. But it's there. The setup is there with the reversal day at resistance. And, you know, COT with cable, I wouldn't call it necessarily crowded at this point because, excuse me, crowded would be like up here, right? But they are on a relative basis, they are pretty long. So the specs here are long. They're at the longest they've been since back in September of 2014. So viewed, say, over the last, you know, 3+ years, they're long. If you view it over like 5 years, they're not all that long. Okay, but anyway, it's enough to look at a possible short position. What else did we want to look at here with cable? There was something else I wanted to look at. Oh, I believe it was cross stuff. So like pound yen, and we'll actually look at that at the end. I've got notes there towards the end. All right. Okay, let's move on to so dollar yen. I have very little to add here from what was noted yesterday in the update. Simply the parallel structure that goes all the way back to 2011 the median line there, this is log, but the median line was resistance last year, the first day of the year. Nailed the high on that. And this parallel, the magenta one, has been quite the dividing line, and at times, exceptionally precise in its, in its support and resistance. So the fact that we have dropped below it, at least, gives me, and you can see here, even going back to April, support, you traded around it a little bit here, broke below, got some follow through, and then a pretty nasty short covering rally. Ended up coming back and having another test as resistance and a short from there before the final low. And now we're back below it. So the fact that we're below it, and even if we were to rally another 30 pips, you'd be safe. I'm just kind of using the first day of the year here with dollar yen, and a decent down day with dollar yen breaking through a level, not necessarily breaking through a horizontal level yet. Your first horizontal level, again, it's probably not till 1165, which is going to be the 200 day, and then the low from back here on 1016. So that's why I'd like to lighten some up if you get there. But given the seasonal tendencies, again, for the dollar yen exchange rate, right, bearish for the most part through 126, okay? So you can see here through 126. And I can give you more details on this as well. Let's see if I have, I think I have them right here. Yes, I do. Okay, so dollar yen. So if we look at the going back to 2007, okay, you've got generally downtrending seasonal, so the last 10 years, okay? Here's British pound. You can see British pound really has been crappy, bad January for kind of forever, back to the 70s. So just nice to have that data on our side. But yeah, so first 3 or 4 weeks of the year tend to be downward sloping bearish tendencies for dollar yen. So just taking that into account with our break of the magenta parallel gives us an objective reason to be short. And the entry here, you got the low here at 1248. The low 1229 at 1248. Today's high 1250. So we have responded, come off 15 pips from that high so far today. So so far so good. At least doing something, responding better than just going straight up and taking you out. And you feel like the whole thing was a big waste of time and money. But if we can start to come off and break the low from yesterday, then we can at least maybe tighten the stop a little bit. But either way, like the idea, like the setup with dollar yen. The COT thing here with Japanese yen is still a crowded ordeal as well. Not as crowded, but it's still crowded, okay? You can see back in November, right? We had, I think it was this, maybe the second, was it the second? No, it was like the fourth most extreme ever in terms of speculators on the short side of the yen, which of course means long dollar yen. So there's still a lot of room, so to speak, for an unwinding there. Okay, Kiwi. I think Kiwi actually has the cleanest price levels. Okay, of all the majors here. If we look at this New Zealand dollar chart, get rid of these moving averages, but you've got, finally, I think that we do have a slope that's worth, working with, right? On the long side. I was always hesitant about using this slope, but it is, it's responding well. I mean, the market for the most part peters out up on the 75 line. We're looking at a 4-hour chart here, by the way, petering out in the 75 lines. And the latest support was actually on 1220 down near the 25 line. So we're playing between those lines for the most part, right? And you're actually seeing the market spike up through the 75 line and actually was shy of the 25 line, which indicates, a strength, their underlying strength there as well. So yeah, I'm fine leaving an order 70, I have it 70.36, basically got the high back here from 12.15. And if I go to the daily chart now, you can see that if we were to pull back, you've got the median line here, which was precise resistance right before the tumble, which was on the election coalition back in, I guess, in October, right? And if we can pull back, we should have really good support, I'd say between no lower than 70, 10, and the first square root level is actually 70.17. But I'd be looking for support, on this high as well, the horizontal level. So no lower than 70.10, maybe up closer to the 70.30 area, which is why the entry's up there, and simply targeting initially the trend line, right? That goes back to the summer highs. So that's your July high. That is your September high, and you would be coming into that. I would expect to see a decent pullback there. There's a couple reasons why. One is you broke below the lower boundary of this, indicating strong weakness in this market. So it's unlikely to me that you break through this on the first attempt, right? There are reasons to be broadly bullish the New Zealand dollar. You, by the way, also have the 2015-16 trend line here. Should highlight that a little more here. Hold on, because that's important. So I got that in magenta now. And here's the trend line. It goes back to here, okay? And it was resistance back here on 11.9. We actually took a short off of it back then, and it was in trade around it. So if you drop back below there, it should be support, and it's right where, again, it's right where the high is anyway, 70.33. So yeah, clean levels for the New Zealand dollar. If we look at the commitments of traders, Kiwi is the most sold out of any currency. The most crowded short position out there. Which I thought was pretty interesting, right? So we've obviously had a number of these crowded short positions over the last few years. 2017, you had a crowded short position back in April and May. That, of course, led to an exceptional rally over the course of the spring and into the middle of the summer. And we're back there at that we're actually more crowded now, right? You can see here the shorts, the speculative shorts in red are more, bigger short position than they had back then. The only thing that rivals it was back during the downtrend to July 2015, which did see a low, albeit not the final low, right? Kiwi seasonals, actually one of the only currencies that is typically bullish very early on in the year, just for the first couple of, couple of weeks. So, this is but one, of course, input, right? To me, the levels are always going to be most important. Positioning will probably be up there. Then the seasonals are, kind of a third, but do like to be aware of it. Okay, Australian dollar, very little to say. I want to buy it, right? We are actually at a pretty good price level right here. If you draw a horizontal line, right, over the high the last 2 days, you can see you're pretty close to the high from April of 2016, right? Right there, 70.34. So kind of running into that. If we do continue higher from here, like over the next few days, you're going to be looking at resistance probably near 78.86. That's the 618 of the drop. Aussie's getting a bit extended. You got the horizontal stuff up there too. Structural resistance 1019 high, 78.83. 78.97 is 1013 high. Eventually, I do think that this will be a screaming buy, but need to get the price right. 77, 1530 is kind of what we've been talking about for the last week on the long side. And you're looking at the parallels, right? So just the trend line from 2016, which is January and December of 2016. And I, would like to buy on a parallel to that line because we've seen so many important pivots on this structure. So, the 75 line, of course, was resistance back over the summer a couple times, right? In July and then in September. And then September again on the rate hike. You've got this pair, the blue one is the one that I think is probably going to be most useful in that it's clean, right? Cuts through price action back here on the way up in June of last year. And, some consolidation on it late last year in October, November. So if you can get back there, you've got the the lows at 77.33, high at 77.29. This area is still one that I'd like to buy. So essentially, it's looking for a down day or two and then higher. But 78.86 up here could be a short candidate as well. Okay, I'm not against shorting a good level, especially if we continue to extend and maybe make a 5 up. Okay, dollar CAD. Let's look at a few of these charts. We are, kind of a bummer still. Last 2 weeks ago, we had that order to short 27.99. Got 27.95, and then of course it's been straight down ever since. But remember what we've looked at in the last couple of charts with dollar CAD is that the median line from this new structure on the 4-hour, which you can see crosses some really good levels, right? You got here as a top support. This is what you want to see the most is support, 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 consolidation, breakdown. You want to see it revisit that for a textbook short, right? It would also be, and here's another, way we're combining slope analysis with simply your classical chart pattern analysis, is that you would have a double top, or you have a double top, excuse me, but a rally back towards this area, right, the 2660s or so, would essentially qualify as a as a retest of the breakdown level, right? So that would be, kind of a double whammy. You're retesting the breakdown level on a horizontal basis, but you're also getting back in, getting the zoom, the retest for the short on the slope method. So that's still something to be aware of, but it is far away. You do have, it's in 100 pips or so, 100 plus pips. Maybe it happens on the Canadian, joint Canadian U.S. employment data on Friday. That's always My favorite type of thing to, to fade is when you have a quick spike, really quick spike, on employment. So that's something to be aware of. Another level to be aware of, though, is basically 126, okay? So 126, you can see you've got this parallel, right? So just moving a parallel down, which does cross a lot of good price action, a lot of good short-term pivots. Even if that's not the top, it's probably a good level of short into for a scalp or something, right? Just take 126, see if you can take it back down to 25.50 or something for a quick trade. And it's a horizontal level too. You've got resistance on 10.6 there. That's the high. And that was obviously a pretty important high because it was rejected on the first visit, and then it was a decent breakout. So 126 and then basically 126.50. Both of those could be levels to trade into, with obviously 126.50 being the more important one. But the support that you're looking at, or that you could come into, is essentially, where are we at here? There we go. Okay, so we are on and trading around the 2012 trend line from 2012, excuse me. But simply the lows down here, right? 10-12 low, 24.33. That's going to be an area. Might not be till next week. Okay, so in a perfect world, we trade up to 26.50. We go short, and then 2 days later, we are 300 pips lower or 200 pips lower. That'd be great, wouldn't it? So either way, the levels are there, and the idea is to short strength in the dollar against the Canadian dollar. Okay, let's look at some FX crosses, or not, I should say they're all crosses, but some non-dollar crosses, non-US dollar crosses, and then we're going to look at silver, copper, crude, and gold, and then I will look at the S&P and the DAX, and then we'll take questions if there's anything else. And I will also show you, I had mentioned on Twitter about doing, maybe sharing some things on different individual markets, like ETFs, and countries, and whatnot. I'll show you where I'm going with that. All right. Okay, so Euro Aussie. Go linear. Okay, so Euro Aussie still holding this support, right, which is a trend line from almost a year ago at this point. So this is the February 2017 low. This is the July low, and you're holding that. This is linear, but you do have this really clean structure, bearish structure going on, and most importantly, 5 waves down, right? So when I say that, when I use Elliott, I use it like this. This is like clean as day. Like, we know this is 5 waves down, right? You can count this. My 3-year-old could say that is 5 waves down, right? You don't need to sit there and try to count it. You don't need to sit there and try to make something that's not there. It's there. That's all there is to it. So it gives you the opportunity to turn bearish on a corrective advance. And, typically a corrective advance carries towards the former fourth wave, which in this case is 55.26, which is also 50% down, right? 61.8%, right? The 618% Fibo would be 55.82. Okay, so this zone is one that I'd like to short into at some point. Now, it is a decent ways away. So is there an opportunity to maybe buy this down here? I could see it. You could call this a wave A and this a wave B. So I can get after that. Does that tell us that we're going to get, some Aussie weakness or Euro strength? I don't know. Yes, Pooja says my 2-year-old counts 1, 2, 3, 4, 5 ABC. Amen. That's right. So yeah, that's my that's pretty. I think that's how my son does it too. He must get it, or they must get it from us when they sit here, listening to us. But yeah, so there's an opportunity here to look at Euro Aussie on the long side, and then eventually take it up to resistance for a bigger short. Something we'll look at in the swing update here later today. So that is one. Another one, of course, is Euro Yen. Again, I like dollar yen lower. As we talked about, I kind of like the yen in general. So yen crosses perhaps, and that's euro pound. That's not what I want to look at. Where is my euro yen? Oh, it's pound yen. Okay, so here is euro yen. Okay, so at this point, we still have this breakout, right, through the consolidation from 922 onward. You do, however, have some waning momentum. So if I were to show you euro yen on, say, this weekly chart, right, you can see the divergent dot over here. It's not as pronounced as pound yen. Similar thing here with on the daily chart. Again, not as pronounced as pound yen. Pound yen, I think, is where I'd rather be if I was going to short a European currency against the Japanese yen. But I will have my eye here. So if euro yen, again, if we can get down and get back down, below what I would call the dividing line here, which are the magenta parallels, right? If you can get down below those, which is more or less the former highs at this point, 34.40. If you can get below there, then I would consider this a false breakout. And again, false breakouts can be amazing opportunities in the other direction, okay? So again, nothing there right now. I'm flat, but monitoring it and, down for acting on it if things start to act right and you get a drop back below 34.40. Could happen obviously quickly. We're 35.10 right now, so it's not very far away. Okay, pound yen. This is one that, again, I mentioned the divergence is more striking here, if you will. We're getting an outside day reversal here today. And if we look at the momentum on the British pound against the Japanese yen, we're getting it on the daily, right? Divergence yesterday. You say, how can you have divergence? Because that was a higher close, okay? That was the highest close in 3 months. And RSI was at a lower high and it was below 65. So that's my rules for divergence, okay? Haven't had a lot of divergence signals here. A lot of divergent signals here, I should say. Let's get rid of all the stuff on here so I can show you the ones we have had. All right, so if we look at divergent signals, okay, so they're not always, going to work right away, and they're not always going to work, not going to work at all. But if we're looking for a top, right, like back here, okay, over here, back in April, looking for a bottom, went for a couple more days, and then turned sharply higher. You get the idea. The conditions are there. So if we start to see price action act right, then we'll maybe want to do it. You've also got weekly divergence, and it's been here for since basically all of December. Again, does it work all the time? Of course not, but they're good warnings, and you can get some really good trades off of them. Case in point, look at all the divergent signals that you had back in 2010, 11, and 12. The market turned up there, right? There were some really big tops back here in 2002 and 3. Okay, so it could be that we're in a fairly broad range for the British pound against the Japanese yen, with resistance up here and, support maybe down, the mid 140s. There's no clean pattern here for me, but I'd be looking for a failed pattern up here. So if we dig into this, let's go 60-minute on this pound yen chart. Can you count 5 down here? I don't know. Counts better to me as a 3 personally. I'm sure someone could make the case that it's a 5 down. This to me also counts though as a 3, right? Probably an A, B, and a C, something like that, right? So, could be a series of 3-wave moves. That's simple. We already have a dollar-yen short, so we could be trying to short pound dollar tonight and essentially put a short pound yen. I'll include that on, in the update later, pound and pound dollar. But would be putting resistance just based on this chart, back at the year open, 52.06, along with the highs over here at 52.32. So, looking there, 52.90 stop probably, and see if you can take it down for a drop all the way back towards the median line under this low at 49.20. Pretty good reward to risk, right? So that is potentially in play as well. Okay, got to move on. We're running out of time. Let's go to, I said I was going to look at silver, copper, crude, and gold, of course. Copper, real quick, took out with that late run in 2017, took out the high from 2014, or July 2014, I should say, and it's a pretty good level. I mean, just generally speaking, you've got big support there from 2012, general area, again, resistance as mentioned, July 2014, and these parallels, this just the trend line, right, have worked out pretty well. At this point, I don't have any strong conviction, and that we're going to plunge by any means, but I would be looking for us to come back towards, say, 317.85, right, which simply former resistance. So that would be the 9.5 high as well as the 11.24, 11.27 highs. And if you get below there, maybe it gets a little more hairy for copper. Here's the long-term trend line on copper. We did break above it. We're now kind of right at it. So, if there's a case to be made for a false break on the upside in copper, it would be here. I don't see a trade there other than something short-term, looking to take it down again towards that mentioned 317.85. Gold, look at the CFD. Pretty simple here, looking for support at the November high. That's it. All right. Look for support at 12.99. That's simple. Okay. 12.99. Look to take it higher. Okay. I think that gold's probably headed back. Could be headed a lot higher. We are in the 2 most bullish months of the year, January and January and February for gold. So any weakness is a buy. Obviously, might be a little stretch right now. With the rally over the last 3 weeks being, taking it from, 12.36 to 13.20, but you get a drop down to 12.99. It's a screaming buy, in my opinion. Silver has retraced the entire C wave, right? We had A triangle BC, nailed the low there, and yeah, there it is, log chart. Not as clean as far as gold with the, because gold's already taken out its highs, but I'd be looking at support at about 1682. That's just the top side of the former channel resistance, or the ABC channel, right? Which of course nailed the low as well. So I'd be looking for support there, okay? Silver's pattern is cleaner when you look back. Like, you have this cleaner head and shoulders looking potential, in my opinion, back to 2016, and you've got a this upward sloping bullish neckline going on if you go back to 2014. But near term, the level's cleaner in gold. 1299 is a cleaner looking support than is silver 1680s or so. And finally, crude oil. Remember the triangle that we talked about? Making good on that. We are actually getting very close, just a couple cents away really from potential resistance here in crude oil. So we've got the breakout. It's happened, and 61.55 to basically 62.56. So like, call it the next dollar. I'd be looking for a resistance potentially in crude, and that is not just the measured level, but again, sorry for all the junk on the chart. Yeah, you got here, we got this May, the May and June resistance from 2015 is this area, 61.55 to 62.56, up also the 1618 level, right, of the measurement from the triangle. So next dollar or so, I'd be looking for a pause in this crude move. Okay, moving on. Let's look at the DAX. Okay. DAX takes out, so we had it right as far as the, remember we had the ABC 1, 2, 3, 4, 5. But now we've got, I don't know what this is. This is like 3 waves down. And quite frankly, Mahai, I know that this is your thing. You love trading the DAX, but I don't have and I hate to make things up, so I'm not going to really go into this. I just don't see anything to do here. I would, I'd say to watch for resistance up here. I mean, the moving average on the 4-hour chart has been pretty good. You can see it's a 200 period average on a 4-hour chart, and you've got pretty decent pivots around it. It would be up here. That's all I'm really going to offer here on the DAX, because after this, breakdown, fake out job, I don't have much to say pattern wise. So watch for resistance there. As long as you can catch resistance there, then the case for lower highs, lower lows can be made. And coming from that bigger resistance, right, we still could get a bigger drop down towards the median line that we had been thinking that we'd get for so long. That's that. As far as the S&P is concerned, that is not something that I am willing to I mean, we're just, market there. This is a market that never goes down, so I'm not sure what to offer, quite frankly. There's plenty of things time when it comes to the currencies, right? If we can look at the square root levels, it'll at least give you, so this is the S&P index, okay? The first square root level from the year open is 2735.50, okay? That is the first one. This is a log chart. of, why is this not going back far? Hold on. Oh, because I'm on a 4-hour chart. So this is a log chart of the channel back to 2016, the low, right? And you can see that see the median line here? The median line from this, as long as you're above it, the risk is that you go blowout style, much like back in the beginning of last year, actually, up to the 75 line, which is where we topped, and we topped on the 3rd square root level at that point. Well, that would put you potentially up near the 2nd square root level at some point, you know, either in February or whatever, late this month, I don't know, at 27.87. Okay, that's really all I've got in terms of S&P. I can't be bearish based on the way I view markets until we have at least a move back below the median line, right? And I would say at that point, I don't even know if I can be bearish yet. At least I would be allowed to think about it. So until that happens, the so-called wall of worry, or whatever you want to call it, is still underway. Now look, here's the good news. Risk is tight in terms of being a bull at this point, right? You're looking towards, again, the 75 line, which is probably not going to be until the 2nd square root level at 27.87. And if we get a full blowout and go crazy, then we'll have an obvious short opportunity, maybe at the upper parallel, maybe at the 75 line. Okay. All right. So now I want to get into and show you why. So I brought up the thing about talking about different, you know, indices and whatnot. So I'm not going to have like the entire, you know, I'm not going to do the entire, what do we call it, like a section on the site or something dedicated to a bunch of different indices. But I do have, so we've got all these ETFs that I follow, a lot of commodity ETFs, and I do have a lot of country stock ETFs. So you can see here, everything from, this is today's performance, right? We got Thailand, Nigeria, I mean, everything from, you name it, okay? Turkey's down here, Africa ETF, Indonesia, UK, I mean, whatever, okay, everything. Now, what makes it easy for me is that I can scan this stuff, right? So I can go in here, for example, and I've got my sector ETFs, country ETFs, stocks that I follow, and commodity ETFs. And this is a weekly scan, and I can scan this, and I can say what is extended decline or whatever. Well, guess what? You know what one of the extended declines was? AMD, Advanced Micro Devices. Okay, Advanced Micro Devices is up 7% today. It was up, you know, 7% yesterday. You can see here. So when I see something very interesting, you know, maybe I will put it on the site, just in the update, right? I know not everyone cares about individual stocks or country ETFs or whatever, but I will put them in there as an aside or something and say, hey, guess what? Like, you know, this is an interesting setup or something. Like, you know, we had a Tesla on a daily chart sold out 2 days ago at the last day of the year, for example. You know, so not everyone's going to be interested. I get it, but we will take a look. You know, EWG. Okay, that was one that we had. That's Germany's ETF. So, you know, Germany's ETF had pulled back on and we were in a what I would call a buy the dip type of thing on the scan, right? So here's EWG, right? I was getting a blue dot. That just means it's a buy the dip warning for EWG. That was showing up here, right? So when I see these different things in the scan, obviously I can't sit there and write about. I mean, we're talking about 175 symbols here, so you know I'm not going to sit there and write about it. Otherwise, I'd have zero life at that point. I don't, you know, already don't have much of one, but I will write about these things when I see a certain setup, put it that way, right? I can just scan it, it's easy, boom. You know, this is a scan from yesterday, for example, on so we have potential buy dips, right? And consumer staples, CME group stock is something that I follow. And actually Hormel, which is Hormel Foods, I follow that just because I think that this year could be a big year for agricultural and kind of inflationary stuff, and this stock might do okay. You can see too that Hormel Foods actually has completed a correction from the 2016 high AB 1, 2, 3, 4, 5C. You got to move up. So this is one that, you know, I will also be looking at over the coming months and what have you. I do think it pulls back a little more because, you know, you get the 618 and better levels down here. But when I see setups for these country ETFs, sector ETFs, commodity ETFs, or even individual stocks, you know, I might be putting something on the site in the updates about it. So don't get confused or something and say, you know, what the hell is this? Obviously, we'll stick to the major currencies and stuff for the most part, but I just thought it'd be interesting and people might get something out of it. That's all. All right. Okay, so I have completely run out of time and I've got to go. But thank you all for joining on the first webinar of the year. As always, I thank you for your time and look forward to a prosperous, happy 2018. All right. Okay. Happy New Year again, everybody, and have a great rest of your week. All right. Bye.